Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we are looking for a 5-wave impulsive structure to the upside. If the low of your wave 4 is finished, we are now looking for a 5-wave impulsive structure to the upside in a wave 5, where the common target area for 5 is 58.7k to 59.7k. However, because of the overlap that we have here, we have to think about an ending diagonal 1, 2, 3, 4, 5, and then see a retracement to the downside before then continuation to the upside. Now the thing is that in an ending diagonal, you want all of the waves to be zigzag family structures, a 3-wave structure up as well as a 3-wave structure down, and that repeated 5 times. This move to the upside does look more impulsive. But if we want to count this and ending a diagonal, it needs to be a zigzag family structure, and the invalidation for an ending diagonal is 59.1k. If we would count this as a wave 1, 2, 1, 2, well, then we're easily going to surpass this wave 5 target area to much higher prices because we're going to be expecting a wave 3. So an alternative bullish scenario is, instead of an ending diagonal, another continuation, another move down in this wave 4, where then your wave 4 is going to be a bigger sideways WXY double combo before then a normal impulsive structure to the upside, where you preferably do not see that overlap. Now, if we open the base channel here, then you can see channel taken from the low to the low of 2 to the high of wave 1. What you like to see is wave 3 move out of the base channel, wave 4 comes back, and then we go for a wave 5. Preferably though, your wave 4 sticks around in the upper half of the base channel and not comes down to the lower half, especially not hitting the lower trend line. Now price got first of all very close to the invalidation of a wave 4, got very close to also the lower trend line of the base channel, which is also not something you like to see. Plus, if we are looking for a wave 5 as mentioned and price continues, we have to think about that ending diagonal, but an ending diagonal at the moment doesn't really look that great because of the impulsive nature of the moves towards the upside. So therefore, what we have to consider at least is price building a multi 1-2 here locally. 1, 2, 1, 2, potentially still another 1, 2, no problem, but at least a couple of 1-2s, after which we then move towards the upside, but to much higher prices instead of the target for a wave 5. Now the immediate resistance that we have to the upside here is a daily at 59.1k, but after that we have the blue box here, 59.4 to 60.2k. If we can pass this resistance, then the next one up here is going to be around 61.6, and then we are going to be in the mid 60s soon after. The invalidation for this scenario is price taking out the low at 55.5k. If you then look at the bearish scenario, then the only bearish scenario you can really have for price moving below this low first before continuation would be to count either a flat in an ABC or a WXY with inside Y also an ABC flat structure. So basically you would need to see a 5-wave impulsive move to the downside moving below this low. All of the other bearish scenarios would also lead, interestingly, to more upside, because in that case you're going to be looking for either a 5-3-5 ABC or a double zigzag, a W, X, and then a wave Y to higher prices. So because all of the other bearish scenarios are also leading to upside in confluence with the bullish scenario, this is the only one I can really show, because in this scenario you want price to move towards the downside. If we then go to the 3-minute time frame, 5-minute, 3-minute time frame, what you can see is that price hit the 886 taken from this high to the low, which increases probabilities. This move down is corrective because the 886 is rare for 2, common for a wave B or a wave X, increasing probabilities. This is a wave C or Y, which in turn increases the probabilities to still take out these highs at a later stage. When we look at the CVD divergences, things start to become very interesting indeed, because we have on the 4-hour time frame this very big bullish CVD divergence with the target being 65k. And now we also have two bullish CVD divergences locally that have played out. First of all, the one over here played out when we took this high, and now this one over here also played out as we took the highs here as well. And bullish CVDs are building. Initially, when price comes down here with bearish CVDs, this bullish CVD here is not interesting. But when we then start to see some local strength and local 1 hour, 50-minute bullish CVDs start to build over here, this one starts to increase in probabilities as well. And as mentioned, the target would be 65K. Now, just to show you an example of things that happened in the past. Bearish CVD, bearish CVD, bearish CVD, price kept moving to the downside. Bullish CVD, bullish CVD, bullish CVD, got an impulse to the upside. Here we had some low time frame bullish CVDs for the initial move up. We came down, bullish CVD, and then here again, bullish CVD and a third bullish CVD, beginning of a continuation to the upside. And then finally, the one that I remember the best, which was at the 15K low. Here, we also had big bullish CVD, right, with this low, locally here, of course, a bullish CVD. But then as price moved to the upside, we started to create bullish CVDs locally as well. Now, price doesn't repeat, but it can rhyme, and seeing the bullish CVDs building over here definitely starts to increase probabilities for the bigger bullish CVD as well. Now we have some news today, Thursday, September 12th, 2:30 p.m. Central European time. I will be live on YouTube, but make sure you trade safe around that hour. And if we then look at the probabilities of the different scenarios, then on the 1 hour time frame, impulsive structures currently have the higher probability unless we eventually would hit invalidation. So higher prices are preferred at the moment. The bearish scenario moving below the low of yesterday first, meaning an impulsive structure to the downside now in a wave C, has lower probabilities. On a 4 hour time frame in general, I am being very aware of the buildup of CVD divergences with higher targets. Continue to keep an eye out for local CVDs to see strength continue. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.